All right, we're back. Tasty Crypto Show. I'm Ryan Grace. It's Monday. With me today, of course, Katie McGarrigle, the Jedi.
Yeah. That was so lame.
That was pretty. It wasn't that bad. It was pretty good. I knew where you were going.
Thank you.
How you doing? How are you progressing in the
I'm
video
good.
game?
I'm good. I just
What level?
there's not like levels to this one, but I was just on planet Kashyyyk.
All right.
Yep. I just unlocked some new skills, souped up my lightsaber.
You got a custom job, like a color. That
Yeah.
you like
I have a green like laser, if that's what it's called. The people in the chat are gonna butcher me for this. Like a green laser, a copper like handle.
Okay. Yeah.
And then you've got other little doodads and bits and bobs. And you can also soup up your ship, which is kind of fun.
Solid.
Get it a new like paint job. So yeah, things are progressing.
Hell yeah.
How
Progress, Katie. That's what it's all about.
it's all about progress. I'm all about growth this winter. But how are
that
you?
winter arc.
Oh yeah, I'm totally in my rot girl winter, as the girlies are saying now.
All right, time out. Yep, I'm learning something new almost every day here. Sometimes a couple times a day. Rot girl.
Yeah, I was like hot girl summer.
I've heard that.
And now
I
it's
didn't know
rot
what it
girl
was.
winter.
Rot girl winter.
Yeah.
Okay. Is that the same thing as the brat?
Well, like brat was like totally brat summer. Like,
All right.
yeah. So that was kind of the last, that was from like June to early September.
That's over.
Yeah. Now it's rot girl winter.
You just not showering or what?
Well, you just like stay in comfy clothes, maybe you
And I'm not judging, by the way.
No, you just like, you live in your little shuffle zone, right?
Okay.
You hit the gym, you come back, and you do little winter activities.
Fire up the PlayStation.
Fire up the PlayStation, make a soup,
Okay. Soup.
rot girl winter.
Cool.
I'm a big soup head.
All right. Let's go there. What are you?
Like literally every soup. I'm
You
soup
make it.
indifferent. I made this really good Chipotle chicken one this weekend from halfbakeharvest.com. Check it out.
You're gonna have to start sharing some recipes with the chat.
I should. Maybe I should change my like social feeds. Instead of sharing my trade ideas, just share all of my soup recipes.
Lifestyle blog.
Yeah. I mean, I am not capitalizing on the multiple streams of income that I could have.
Not yet.
Not yet.
Yeah, you need that Wi-Fi business. You need that online, whether it's e-commerce or you're just putting your content out there.
Yeah.
Put a paywall up on your Twitter.
I know. Yeah. Well, I mean, I'm really hoping the crypto thing kind of works out. But if not, that's my contingency is katiesoups.blogspot.com.
Beautiful. Well, let's talk about the crypto thing here in just a
gosh.
second, Katie. Before we do, we got to shout out the chat. If you're not watching this on YouTube, get over there and type something crazy into the chat. Lone Sophos, Jose, Big Deal Donuts.
Heck yeah.
Gang's all here.
Party on. Let's go.
All three of them.
I hope everybody's recovering from last night's flop of a game.
Yeah. What the hell?
Did you win any squares?
Not that I'm aware of.
Okay, I didn't either.
Assuming somebody would have told me if
Yeah.
that was the case.
I had squares on 3 different sets of sheets, I guess.
Yeah.
Didn't win a damn one. Almost won the game
Ooh.
on one of them, but missed it by 1 point.
Did you hit on any other bets?
Yes, I did. I won the coin toss.
Oh, nice.
Did not win the Gatorade color. I picked blue. I believe it was yellow.
Ugh.
I know. And I also didn't pick the right winner of the coin toss. The Chiefs won the coin toss. I picked the Eagles. But that was all I did, like, in the world of legal sports gambling.
Do some illegal stuff too?
Well, I think squares are kind of illegal, right? Like, not that illegal, but, like, you're not supposed to, like, put in your Venmo, like, this is for squares,
Oh.
Yeah.
Whoop.
Oopsies. What about you? Did you partake in anything?
Yeah, all my bets lost because I thought the Chiefs were going to score. Right, I came into this, I had a plan, I had all sorts of things lined up. No, the bet was to take the opposite of whatever you think, right? Why would Saquon Barkley have a bunch of yards and touchdowns, right? That was an idiotic bet.
Yeah.
What are you thinking,
You ding dong?
I am a ding dong.
I think a lot of people out there were. I saw somebody that put up like $1 million for the Chiefs to win. That's got to hurt today.
It seems like that was what was written, though. You know, that first flag that came out on that 4th and 2, where the Eagles caught the ball, and then they said, no.
Nope.
Not just
no can-do'sville.
So, yeah, I thought it was going to go that way. But, no, I'm happy with how it turned out, I guess.
Yeah, for sure. I have a fitness instructor that actually your wife, sometimes I, have rubbed elbows with her at the gym that we both frequent. And she likes the same instructor I do, and he's a big Eagles fan. And he said on Friday when I was in his class, if you don't see me next week, it's because I'm at the parade. So he didn't get to go to the game, but literally I signed up for classes with him this week, and then he's already been taken off the roster. So I'm assuming he got his flight to Philadelphia.
Those Eagles fans go hard.
So do the Bills fans go, I think, the hardest.
Yeah, well, in the parking lot, maybe.
True.
I mean, the Eagles fans go hard in the city.
Yeah. That's their playground.
Well, hopefully he's fun.
Yeah, hopefully he recovers.
Stays safe.
Yeah, I just want everybody to have a good time, be safe, not to belittle it, but it is just a game.
It's just a game. It's over, and we're back. Let's talk some crypto, Katie. Token selection. We're going to talk a little bit about market awareness. I know you have some questions. This is a bit of a continuation from the Where Do I Start series that you and I kicked off not too long ago. If anyone wants to take a look, go over to the Tasty Crypto YouTube channel, and you can check out those previous episodes, excuse me. But I want to talk through some more questions that you have. We'll go through our trading view charts, kind of give a look at how we think about markets at times, similar to what we do when you get started with options trading. What do you want on your watch list? How do you think about this? What do you pay attention to? What do you need to be aware of? Try to do something similar here as well. But just taking a peek at the chat here, starting to pick up a little bit. I got to shout out Jose, going on my second liquidity pool and loving it. Thank you, Ryan, for showing me the way.
Nice.
We've got to do more liquidity pools on here as well. Another video that you can check out over on the Tasty Crypto YouTube channel. So shameless plugs all around.
Yeah, I will say though, Jose, no shade at your little icon, but it's like a clown, and it's a little bit.
It's creeping you out?
Creepy.
Uh-oh.
Yeah, I wonder what the story is there.
Well, you let us know the story there, Jose.
Yeah, but shout out to everybody in the chat. I've been getting a lot out of this series, and I think my biggest hurdle is still just choosing the directionality, right? Like, I know that eventually there will be more sets of derivatives in which we can, play and utilize, which is way more my wheelhouse. But still right now, like choosing the black, white, up, down nature of any of these crypto markets is tough for me. So I am really looking forward to seeing like how your brain starts to process, okay, this is a buy for me, this is a sell, or like, hey, this is weak, I'm going to dump X percentage of my holdings in whatever coin that might be, and just kind of, I want to hear more about like your process.
Okay. Yeah, absolutely. So let's start off with, and I know we've talked about this a little bit previously, but let's just start off with the crypto market update. And I will just point out kind of what I look at, I suppose in sequential order in some ways, but I'll work through these dashboards with you, and then we'll go over to TradingView and take a look at some charts. So the first thing that I look at, Katie, is just simply the weekly and monthly price performance. Try to get a sense of the trend. We look at the price momentum as well with exponential moving average crossovers, try to stay on the right side of the trend and use those as signals. But the first thing that I want to look at, and people are probably like, well, duh, seems obvious, but I just want to have an understanding of what is the performance in here,
right?
And you want to be in things that are doing well, and you want to get out of things that aren't doing so well. Crypto's tough because, as you mentioned, there are not a lot of derivatives. You can go into the futures market. You can trade options on the ETFs now. You can obviously short the ETFs. But for most participants, it's hard to put on a short position unless you're using these derivatives. Outside the U.S., traders have access to perpetual futures. Traders have access to listed futures here in the U.S., but you can't short the spot market.
Right.
Not in the same way that you can borrow shares of stock and you can short them in the open market and then return them later.
Yeah.
You can't do that with crypto.
Yeah.
So So you're kind of just on one side of the trade. So either you want to be in it, and to your point, you want to be loading the boat, which ones do I want to own more of, or you also want to be out of some tokens. And I think that's one way that you can kind of trade some of these ratios where you're not necessarily going into this and saying, okay, I want to be short Bitcoin and I want to be long ETH. But if you had an equal weighted position in your portfolio, there might be times where I want to be overweight Bitcoin and I want to be underweight ETH or something else, or vice versa, whatever it might be.
Yeah.
So the first thing that I want to pay attention to is just what's happening in the market and how are these things performing. A lot of the time, they move in the same direction with varying degrees of volatility, as you know.
Yeah.
But that's the first thing that I'm going to look at.
Okay.
Next thing that I'm going to look at is the momentum that might exist in the market.
Okay.
Price momentum.
So that's the right hand of this table.
Yeah, on the right hand here, and it might be easier to see if we just throw up the browser for a second and jump over to this. I can show you what I look at here, and you can set this up in tastytrade. You can put exponential moving averages on your charts. But if we jump over to the next one, you can see, or to the browser, you can see what I'm talking about. So here's where these signals are derived from, okay? So if I zoom in a little bit here, we've got these exponential moving averages. And then when they cross over, when your faster period crosses over your slower period, you get these different signals. And so what I want to be aware of is not so much are we in a bearish environment across a daily, weekly, or monthly time frame, but more so where are we coming from? And that's going to help give you an indication of where we might possibly be going. It doesn't work perfectly.
Sure.
So
Markets
you can
aren't
get
perfect.
a bit of noise, and you can certainly see more noise on the shorter term time frames. But if we're coming out of a bearish trading environment or market environment from a momentum perspective and quickly transitioning to something that's neutral and then bullish, and that's confirmed by an increase in trading activity, by volume, or an increase in volatility, that to me is a pretty strong signal.
So wait, which of these is the short term and which one's the long term?
So the fastest moving one that I have here is in
the
blue.
teal? Okay.
Yep. And then
blue.
the slower one, you can't quite see it. It's in purple. I apologize. I realize that it's a little bit hard to see against the black background there. But what's important is the color here, and that's going to give us that signal. So that's where the daily price momentum comes from. So we're looking at Ethereum, right?
Yeah.
This is bullish. We've got, a bit of chop here, and sometimes you're just going to get chopped up. That's the nature of it. But quite often, this is going to keep you on the right side of the trend. So the most recent bearish signal in here that's popped up was at the beginning of January. And you can see we've consolidated sideways and we've traded lower for one reason or the other. The most recent move lower was on the tariff headlines, the risk-off move last weekend.
Yeah. And that's in hindsight, right? Like I started dabbling in this with you in early November. That's when I really first started to load up. And I say load up very, very lightly, right? And I was doing well because, as you can see by that chart, like obviously everything was going up at that time. It was post-election. There was a big, sentiment shift around what was going to happen regulatorily with crypto. And then, since then, I've seen a little bit of a pullback in some of those investments. And again, I'm still learning, so it's not like I'm in a place of detriment or threat to my portfolio, so to speak. But like, I wish I would have looked at this in January, right?
Well, I think it helps you stay on the right side of it at times, but there's a couple different components to this. So we're looking at the daily.
Yeah.
You look at the weekly, and this is a little bit more important to me because it's a slower time frame. And here we're now seeing that you've gone from bullish to neutral to now we have this bearish signal. Now you could get something where you just stay here and then very quickly reverse, right? This is not anything that's forward looking, it's backward looking.
It's not predictive.
Obviously. But it gives you a sense of kind of what's been happening from the momentum perspective, right? Is the trend moving higher? Is it bullish, or are we moving lower? With ETH, we've been moving a lot lower. I mean, not that you had any signal to get out on a weekly basis up here, but you would have been able to front run that by looking at shorter time frames. And so you could look at this in terms of a 12-hour period. You could look at a 4-hour period, but you're going to obviously see that those signals are going to trigger ahead of what then shows up on your daily, which is going to trigger ahead of what shows up on the weekly and the monthly. And if we go to the monthly, you can see that these are pretty strong signals. Again, you can get chopped up a little bit. Here is a period of time where yeah, maybe you made a little bit of money if you were in this at 1,000 and you traded back up to, almost 2,000 or so. But the bigger moves occur when you get these signals. So here in 2020, that was a pretty strong signal. It doesn't mean that this is what's going to happen, but it kept you in the trade until ultimately, you started to see that breakdown.
Right.
But these are the monthly bars. And so you would have seen that selling pressure or those signals triggered on the daily, on the weekly.
Right.
So this gives me a sense of the longer term trend. This is why I say when we look at Bitcoin or we look at ETH or many of these, still structurally bullish from a kind of secular perspective, bullish, but on a shorter term time frame, you're definitely going to see some different cycles. If I look at Bitcoin, here's the same thing. Very, very bullish. But if you were to pull back, you quite often see that we pull back, and it makes sense mathematically. You pull back to these kind of longer term averages.
Okay.
No different than using a 50-day, 100-day, 200-day. This is just using an exponential moving average over some different or shorter time periods. So that's the first thing that I look at. Here's Bitcoin again. Bitcoin just triggered bearish on the daily, but on a weekly, we're still in the green there.
Okay.
The weekly signal to me is what gets my attention.
Sure.
So going back to our crypto market update, back to the slides for a second, one thing that has caught my attention recently, and there can be a lot of noise here, but you should pay attention to this. ETH has now gone to bearish on the weekly.
Yes.
It hasn't traded very well. The way that I would think about this is not that you have to go short or anything like that. You could, but I simply am less interested in adding a ton to it. You might be throwing good money after bad at this point, and it can quickly reverse.
Sure.
But in terms of my positioning, I might look for some opportunities elsewhere.
Okay.
Solana a bit stronger. I look at Bitcoin up 4% year to date. Well, Solana's up 4% against that. So Solana up about 8% year to date gives us 4% outperformance against Bitcoin.
Okay.
So that's how I use this information. I also think it's very important to look at implied and realized volatility and understand is volatility expanding or contracting in the same way that you would look at this in other markets. And then as you do that, in the same way that you get a sense for how the S&P trades or what a big day in the S&P is when you're just getting started, you'll get a sense of what, kind of those normal conditions are for volatility, for price action, price movement, and then kind of set that against the backdrop of what trend you might be in, whether it's bullish or bearish.
Okay. No, that makes a lot of sense. I think, looking at it that way is just not something I'm historically used to doing, right? Like I'm so used to my pattern of, okay, looking at like a yearly chart, are we on the high or low end or maybe somewhere in the middle? And then how do I then use that information to kind of either choose a direction or choose a lack of a direction? And this though, I think, is something that I'm excited to learn. Tasty Trade has a relationship, I guess you could call it, with TradingView, which is really cool. I know that soon they're hoping to support the crypto coins through the TradingView integration. But that's all to say you can still do that even without.
Yeah, you can set this up with your Tasty Trade charts as well. Just add exponential moving averages. And even if you were just using a 50 and 100 period, it'll help you with just staying on, I think, on the right side of the trend.
Yeah.
So here's how I maybe augment that process, right? I want to be on the right side of the trend in crypto for a few different reasons. One, really hard to go short. Yes, there have been some periods of time where this has massive drawdowns over multi-year periods, but this can just explode in your face.
Yeah.
And
kind of like my gold position.
Yeah, there's just certain things where, we know oil from a commodity perspective can have some very bearish periods, and we've seen it trade negative over COVID. We've seen volatility absolutely explode in there to the upside.
Wish I would have loaded the boat on that negative number,
That was a crazy period.
Insane.
And so we've seen that before, but traditionally, historically, the risk has been to the upside in that you could get a pipeline explosion or you've got missiles flying and there's geopolitical risk. And next thing you know, your short position's blown out because oil's up $5 overnight on something occurring in the Middle East, for example. I think that's to the extreme in Bitcoin or crypto.
Yeah.
Where, yes, you can make money on the short side, but most of the participants are long.
Totally.
The same thing with the stock market. Obviously, there's tons of opportunities to put on contrarian trades.
Yeah, but
at the same time, there's a passive bid, and most investors are on the other side of that trade over longer periods of time.
Yeah.
So with a long duration asset, kind of a tech stock sort of thing like crypto is, I want to stay on the right side of the trend. Most of the time, that's going to be bullish. And then when it's bearish, I'm probably not short. I'm just making sure that I'm managing risk as a result. So all that said, right side of the trend, but trading the range. And what do I mean by that? What I mean by that is trading the expected move, the one standard deviation range, the implied range, whatever you want to call it. We take that volatility, the spot price, just like we do with anything else that we trade here on Tasty Live, and we calculate a one standard deviation move. This isn't perfect, as you know, but when you look at this on a weekly basis, it gives you a little bit of kind of a framework to apply to this.
Of course, yeah. It just helps you contextualize and understand the true risk, I say in air quotes, of these types of positions.
Yeah. So I'll take Bitcoin as an example here. Bullish trend.
Yep.
I want to be on the right side of that. I want to be long. But within that trend, I've got a $7,000 expected move. Right now, the downside then is roughly about $90,000 and the upside's about 104, 105. I have a core position that I have had for some time and I think could be much higher in price in 2, 3, 5 years, whatever. I'm long-term bullish. But in the short term, I want to manage risk by having an understanding of the implied volatility and the range that we're trading within. So if we pull back to 90, I might look to add a little bit to that position. If we move back up to 105, I want to take a little bit off the table. I want to manage that risk so that inevitably when it does pull back again, I've got more capital to put to work. And I want to stay on the right side of that trade, buy the dips and sell the rips as long as it's a bullish trend. The opposite is true then if this is a bearish trend. I want to cover shorts at the low end of that range, and I want to maybe reshort that position when you move to the high end of the range, all based on the vol, with the understanding that that implied volatility right now is relatively low. IV rank on a 1 year basis of 28, but more so on a 3 month basis, it's almost 0 at 14. And so you have to be aware of that condition. So you kind of have this dashboard, right? And I equate it to trying not to crash the car, but win the race. And sometimes it's more important to not crash than it actually is to win the race.
For sure.
And that's what this helps you do.
Yeah. I mean, that's a great analogy. And I guess like my follow-up question to you there is knowing that you have a core position and I'm just dabbling, right? So I'm not even there yet. But like when you're taking risk off, does the degree of the trend impact how much you shave off of that core position? Or do you kind of have a set percentage that you default to? Like, I'm going to peel off 10% or X monetary value, like when you are looking to rotate or take some off the table?
Yeah, it's a great question.
And you're like, I'm saying that knowing that your word is not gospel, but like, I'm just curious about your approach.
Absolutely, not even close to gospel. It's more of an art for me than a science. You know, it's not like I'm coming in there and saying, okay, now I need to take 2.5% of my position off.
Right.
It's more so just knowing that if I have some capital to put to work, and let's just say it's arbitrarily $500, and ETH pulls back, you see a big down day, like we saw just over, a week ago or so. We came in last week, and you had a huge flush over the weekend. ETH got blown out all the way down to 2,200. But by the time we recovered, we're kind of back up about 2,500 though. If I'm buying it there, I'm probably taking, as a trade, I'm taking a good chunk of that off as we move back to the upside of that range, if we move to the upside of the range. But that said, it's kind of like this wait and see approach, and you make the adjustment on the fly. But yeah, if I'm adding to it and I want to trade out of that position against my core position, it's probably around the same size that I put in there, if that's the reason why I'm going in there. Now, it could be that you just have a huge pullback for one reason or the other, and on a long-term basis, I think, okay, this is a huge entry point, right? If we go down to 50,000 in Bitcoin, maybe I want to buy thousands of dollars worth of Bitcoin because this is now adding to the core position. So it's kind of situational, if that makes sense.
Yeah.
But if I'm just trading this week to week and we're chopping around like we have been recently in this range, this 90 to 110, yeah, I'm just trading that range with whatever size I'm buying. I'm probably selling out of most of it.
Okay, cool. That makes, that makes all the sense in the world. I just didn't know if, like you're saying, there was like a formula and a method, or if it's kind of more by gut feel. And
There probably should be, but
I think
not really today.
No, that's a fine answer. I guess my one last follow-up question to you is, clearly we've been looking at these like major market cap coins to kind of guide our discussion. And that's where, when you're first learning about the markets, you start with like the indices and then you trickle down into various sectors or maybe ETFs, or maybe you don't. Maybe you start with individual names that you know. But does this same idea apply to some of like the more fun coins, I guess, meme
Absolutely.
coins? Like,
yes, absolutely.
Okay.
Let's get back over to the charts really quickly and we can just run through this. Yeah, I do the same thing. I do this with equities, with futures on any commodity, on currencies, on crypto.
Okay.
Same thing. I have the same approach for all of this, and I've done this for years if you watched me and Victor and that sort of thing.
But how does it work if you're looking at like one of these
if you don't have enough, if it came out yesterday, no, you're just...
No, but like a meme token that like had its moment in the sun and now it's just grinding sideways. Like when do you wave the flag and be like, all right, like this is not the one? Or do you just leave a little in? Like,
I think you leave
and it's
a little
a lottery
in,
ticket.
You get stuck with a little in that sense, given how quickly some of these can move. Let's just run through a couple of these really quickly, and you can see what I'm talking about. Where again, you'll get chopped up. These aren't memes, but here's Uniswap.
Sure.
Same thing. You can use these signals. You're going to notice that just about all of these look the same. Here is more of a meme, AI16Z. So
I remember you playing that in bag battles.
All right, so you got the green signal here. It is not indicative of what's going to happen in the future, but it did ultimately keep you in the trade until that trend changed. Now, you might look at things where you're saying, oh, wow, I'm really extended versus the moving average, and maybe you take a little bit off the table. Maybe you take a little bit off the table because you made a shitload of money.
Yeah.
I don't know what it is.
Yeah, maybe you're that 15-year-old boy who like made like a couple grand and then just dipped out.
That's the art here. It's going to be situational, but these help you to at least get out or stay in it. And so you see that trend change. And again, maybe you get chopped around and you were wrong in getting out. But in this case, if you sold out around here where I've got the cursor, you've been out of it from kind of 150, 130, it was, $1, let's say, and this is back at like 30 cents.
Yeah.
And so you can see the same thing in all of these. I use these. I mean, they're backward looking, but they help you protect capital. They help you to take some money off the table at times. You can see these all kind of look the same. And then when you're looking for opportunities to buy back into these, you probably want to look at this on a shorter term time frame. And once you start to see that pop up on, let's say, a 6-hour, 12-hour basis, it's going to front run the 1 day. There's a little bit of, again, an art to it because you could be wrong. You've got to trade in and out of this and manage it. But you can use these across. I mean, here's degen. So you were in it, you got out, and you never got that green signal again, and you rode it from 17 cents down to, or excuse me, not 17 cents, 0.016 to 0.0039.
Yeah.
So
okay.
One more thing I want to show you very, very quickly, Katie, and we'll talk about this in more detail. The other way you can use this is to look at these things priced in Bitcoin. So here's Solana versus Bitcoin, ETH versus Bitcoin, Solana versus ETH. If I could only trade three things, I want to be in Bitcoin based on that, and Bitcoin dominance will show you that too at 61%. Again, all this is just telling you what's happened in the past, but usually it's an indicator in the short term of what's going to happen in the immediate future. And so now if I'm looking at, do I want to trade Solana or ETH if I'm going to put my next marginal dollar into something?
Yeah.
Solana has been for some time, going all the way back to kind of the end of January. That's where the trade's been on a relative basis.
Right. Beautiful.
So a lot to unpack there, but we will continue this conversation when you're back.
Yes, I'm looking forward to learning more. I think, there's a lot more I need to kind of wrap my head around. I probably need a quiz at this point. Even just the vocabulary is still very foreign to me. But yeah, we have so much to talk about still. And I'm also looking forward to learning from, Shelly too. I know you guys have been kicking butt on the Wednesday show, and lots more happening over here in the crypto world.
Awesome. Well, thank you for coming on. As always, I'll be back on Wednesday with Shelly. We're going to talk about portfolio construction. Katie will be back on Monday next week. But until then,
we're off
I'm
next
Ryan.
Monday.
Oh, we're off next Monday.
So maybe in a little bit, maybe we'll do some cameos here and there.
Yeah, we got some other stuff launching too that maybe you'll pop up on.
Yeah. I'm Katie.
Yeah. We'll be back. I'll be back on Wednesday. We'll be back sometime.
Sometime.
Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.